Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your fee back and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
All right. Good morning, guys. Welcome back to another live stream. Thanks for being here and happy Friday to everybody. Hope you're doing well. Take a look at markets here today. Things are on the move. The indices just keep running, and I would be lying if I didn't say this has been frustrating for me. I missed this move here just barely. I got stopped out here before the run up, so I am currently waiting for pullbacks on NASDAQ, SP500. And we've got also, I want to take a look at the dollar index. We'll be looking at all sorts of charts here this morning. Thanks for tuning in. I see people in the chat, Esther, Baby Boy, Remy, FX Wolf. Good to see everybody in here. Thank you for being here. Groovy FX. Good morning. Good afternoon. First of all, let's take a quick look at the overall picture here for the day. We'll take a look at all markets. See what things are looking like on this front. And also we'll talk about in a moment, we're going to talk about oil. I might be taking a position here on today's Friday price action. I've got a setup that I kind of want to watch. Dollar index is coming back down. You can see dollar index there. Pound is making a move higher. Euro moving higher. NAS, S&P, US 30 opening up strong here this morning. And it looks like the rally just keeps moving on. Same thing with the euro. The euro's been having a nice bounce, but we'll see how that one plays out. I am still bearish on euro dollar. We'll see if that one can roll over for us. Here's gold. Gold bouncing off of 2016 up to 2029 an ounce here this morning. And oil really taking a sell-off. Like I said, I might actually be entering into a position. And I want to take a look at oil here just momentarily. There's the NASDAQ. Look at that push. Just crazy. Keeps going and going. Let's see. NVIDIA up to 850, 900. Man, it totally could happen. That thing is just indestructible right now, it seems like. Let's take a look at oil here. Again, I do think I'm going to take a position here this morning. I was long. I ended up trailing out of my trade. So I'm looking to potentially re-enter here while we're on stream. In fact, I might do that now just while we get started. And we'll see what we can catch. So what's the thought process on oil? Well, oil has been getting nice, strong, bullish reads here recently on the Edge Finder. The commitment of traders data has been really strong. We do get more data, by the way, at the end of the day on the oil market. That should be really interesting on the commitment of traders data. Again, that comes out at I think it's 3:30 p.m. Eastern. The Edge Finder uploads the data into the system, and then we get a score based on that. So we'll continue to watch the commitment of traders data here this morning. I'm sorry, not this morning, this afternoon. But in the meantime, the latest filing has been pretty strong for oil. We'll see if that continues into this week. Why is the dollar index so bearish this morning? Well, you really don't have a lot of news this morning. In fact, there's like nothing on the calendar today. So it could just be some business as usual movements. I don't know what's going on with the dollar index, to be honest. I think it's just kind of chopping sideways. It's not really made any decisive pushes this week, although the candle closed pretty bullish yesterday. It's just trading sideways right now. As long as we don't take through the lows, if we take through the lows here today, I would say that just looks bearish for the dollar. But right now, this is just kind of choppy price action in the meantime. I think the market is probably waiting for our next big catalyst, our next big event, which we could go ahead and take a look at. Let's go ahead and say next week, see what's coming up. So next week we have consumer confidence on Tuesday, which could be, of course, market moving. And then we have core PCE on Thursday. which of course, this sort of data, any inflationary reads could be very important to the dollar, could be important to indices, gold, etc. Chinese manufacturing PMI comes out on Thursday. That should be interesting. PMIs for the US, ISM manufacturing PMI, and revised consumer sentiment comes out on Friday. So there is some stuff, there's some data next week, which could be market moving for dollar index. But right now, just kind of trading sideways and not doing a whole lot here this morning. Again, we did bounce nicely off the lows. As long as we don't break through the lows, I think the dollar, is still intact at these levels. But yeah, big prints next week should be interesting to see how that forms. I mentioned this a second ago. I think I'm going to take a position on oil. So give me a moment to do that. Also, look at those indices. Just keep ripping. Yesterday was up huge. I am looking at the indices. I'm still bullish. And at this point, I'm waiting for a pullback if I can get one. If we do see the S&P or the NASDAQ pullback, I'll watch for a possible re-entry, even though I've missed this move. I think that there's a possible correction that could set me up for a great trade anyways. So I'm watching indices on the long side, but currently I've traded away from me, so I'm unable to touch them at this time. So just being patient. Same thing with the Dow. Russell has still just been, not seeing any sort of significant love. The gold market still incredibly boring, not moving anywhere. Gold just flat. And the thing here, I've made this point over the week a couple times. If you've been watching gold, it's been pretty frustrating because this market has not moved much. And it also just doesn't really have a clear directional trend right now. And I'm not just talking about technical analysis. I'm talking about fundamental analysis. I think is a bit mixed. You have concerns geopolitically, which kind of prop up the gold market, right? Stuff going on in the Middle East, Ukraine, etc. But at the same time, you have the dollar index potentially willing to strengthen if rate cuts get pushed back further. So I don't love the story for gold. I don't see a clear directional setup, so I'm personally not trading it myself. I do want to take a look at oil here. Like I said, it's coming into a level that I'm watching, so I'm going to probably get long here. I'm going to go ahead and set up that trade. So let me go ahead and do that. So because I'm in the US and because I can't trade CFDs, let me get some information here. So we're going to put US oil on the right hand of the screen. Here's what I'm going to do. So I'm going to go ahead and trade this thing long. So we're going market order. And this is kind of a convoluted process, but I'll show you how I do this. Because I trade in the US, I trade ETFs. You could do futures if you prefer it, but I just prefer ETFs. It's just something I've traded for a long time, and the broker that I use offers ETFs, exchange traded funds. So I can trade US oil. It is, basically moves alongside US oil, the CFD, which of course most traders outside of the US can trade. I'm looking for a stop loss of about 0.9%. So I'm going to go ahead and, like I said, we're going to get long here. And, oh, sorry about that. Sometimes it does this. I don't know what's this integration between TradingView and various brokers. Sometimes are a little tricky. Anyways, I'm going to put a stop loss 0.9% away. Let's go 0.9%, 71.56. It's going to be a sell stop. 71.56 is what I said. Stop loss must be higher than order entry. Sorry, 71.56. Oh, it's not a stop loss. It's just a sell order. 71.56 is what I said. So I'm going to do that. Let's mark up the trade on US oil as well. And let me just go ahead and warn, please do not copy this trade. If you don't understand why I'm taking this trade, you really, really should not copy anyone because, of course, this trade totally could lose out by the end of the day. This is my second attempt on oil. I did get trailed out, so I moved my stop loss into profit and trailed out. So I'm re-entering a trade idea that I had. So let me just go ahead and get this. So 0.9% risked. I'm going to go ahead and do this. And then on my second screen, I'm going to go ahead and set up the alert. Okay. By the way, guys, while we're doing this, I do want to say we're handing out our course for free today. We have a totally free course available to people who join our Discord. Chandler, if you could drop the link for everybody in the chat. If you guys join the Discord, check this out. Join the Discord, shoot Hallie a message. She's handing out the course for us today. So join the Discord. We just dropped the link while I work on this trade alert. Click this, go into the server. In the new member section, just shoot a message to Hallie, and Hallie will get you set up with our course 100% for free. So we are handing out our course today to people who join the Discord. So enjoy that. So I'm going to set up my trade alert here as well in the Discord. So give me a second. Let's go to commodities and let's go ahead and do this really quick. I'm going to take a screenshot of this so that we can switch back over to US oil. Okay. 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 Bear with me, guys, as I get this alert out. Sometimes it's hard to multitask, stream at the same time, so I'm just getting this trade in. US oil ETF. Entry here. Entry price 76.88. Stop loss is 76.19. All right, and then we'll take a look at US oil, do the same process. So USO, so because I trade an ETF, right, I like to, with my trade alerts, I like to share the oil ETF levels. So I'm going to do 72.22, 72.22 as an entry. And my stop loss is 71.56. And if I get stopped out, I get stopped out. If I can catch a little bit of a run here, that would be great. Re-entering my previous trade idea at support here on the retest. Okay. All right, trade is in. Let's see how that one goes. Dollar index bouncing a little bit here this morning. Let's see how that plays. And again, my thought process on oil, let me go through this really quick. So oil's selling off here today. If I do get stopped out, I'll probably look for another reentry, maybe on Monday. If I can catch a bounce, then great. If I'm a little early to it, then I probably will re-enter. One thing, I've said this many times about my trades, entries are incredibly difficult. Everyone knows that entries are hard, right? Entries are really, really tricky to get pinpoint correct. So instead of obsessing over entries, what I do is I look to enter more than once. So, and not necessarily at the same time, but this is my entry right now. If I stop out, then I may look to re-enter at this level, right? So I try more than once on a particular trade. I did catch this run, trailed stops, and then when price came down, I closed out. I'm now re-entering into the oil trade. So let's see how it plays out. But I think I mentioned this. I want to make sure that people who just missed that, we're trying something out today. If you guys would like to get access to the free course, I see a bunch of you guys joining. Welcome, everybody. Click the link here. We'll drop it again. Message Emily. Emily's now doing it. We're taking turns here. So if you guys would like to get access to the 100% free course, Emily's handing that out. For those people who shoot us DMs, again, all you have to do, it's a really simple process. Click this link. Join the Discord. There's free stuff in the Discord. We put out free analysis every single day. There's, between Frank and I, we put out a lot of content for people. So join the course. Join the Discord. Get the free course. We don't offer a paid course, but our course is available for free for people who DM Emily today. All you have to do, literally just type a message, say, "Hey, Emily," and she will get you hooked up. Okay. So there you go. Whereas Hallie, we're switching out. So Hallie was here. Now it's Emily. They're taking turns so that they can handle everybody's message requests. There's a lot of people who are going to want to ask for the free course, as you can probably imagine. So get your message in there and someone from my team will help you out. Bitcoin's trading lower here this morning, kind of trading sideways, which is interesting because the market is rallying and yet Bitcoin's kind of staying flat. Kind of interesting. Gold is indecisive. Yeah, gold. There's just nothing going on with gold for me. It's just so choppy, so range bound here in the last. I mean, this is a daily chart. So if you're like an intraday trader, you might have been like, well, hey, I could have caught the pullbacks, caught the moves here, and maybe you think you're trading up to this level. Like there might be something on the lower time frames that you see, but for me, the daily chart is just really indecisive at this time. So I'm waiting for what most market participants are waiting for, which is some new, economic data. Next week we get PCE. We need to hear from the Fed. We need something that gives us some momentum one way or the other. So, yeah. I see Frank in the background. We're gonna bring Frank in for a moment. I'll chat with him, see what he's looking at here this morning, and then we will go from there. So what we'll do here real quick, we're gonna thank our sponsors. We'll come right back and see if Frank has any trades here for us in just a moment. So right after this, we'll see Frank.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, and we're back with Frank. Hey, Frank, how's it going, man?
Hey, I'm good. How are you?
Good. Hey, oil kind of took us both out yesterday. I was trailed out, and I think you were in a trade. I'm re-entering oil. What do you think oil at these levels? Do you think we could see a bounce, or do you think it's going to roll over?
I'm still bullish. I think because it's still in that similar to gold in that range bound position. There's heavy resistance there at 78, 79. So I think it's going to have to retest that a couple times. And if it cannot and it breaks underneath the 75-ish level, I think that's kind of a reversal sign there. So until then, I still remain bullish. I didn't buy US oil, but I bought UCO, which is the ETF. So I have my stop way below this certain specific range bound area. So I'm still holding on.
So is it more of a little bit longer term swing for you?
Well, I don't know. If it ends up coming up by next week and retesting and coming higher, then I'll be happy with that. But if it breaks below, then I'll probably be out and take my loss. But it still looks like an uptrend to me. There's higher highs, although the concerning part is that it's a triple top, and PMI data came out mixed yesterday. But I also have a question about services and manufacturing. The way I see it is mixed data because one came in hotter than the other. But what is more important to look at, in your opinion, between manufacturing and services? Like which one has greater impact?
Yeah, so I do this podcast for Frank, you already know this, but for people in the audience, I do a podcast with a couple guys from marketpulse.com. I'm one of the co-hosts on their weekly podcast. And one of the guys, I asked something similar to him, and he made a really great point. The guy's name is Craig, for those guys who listen to the podcast already. I asked Craig about, services, manufacturing, PMI, what matters. And Craig is from the UK. He mentioned that in the UK, it's like 75, 70%, somewhere in that range of the economy is in the services category, whereas a smaller minority is like 25% of the manufacturing. In the US, it's the similar story. So he said kind of the same idea. So the one to really watch for is probably services, which was the less impressive one. So that was kind of maybe the reason why the dollar index had a little bit of a sell-off in the last few days, partially speaking. So I don't know. I think services is the one you want to look at, which I know from our case, Frank, the services being the worst performer is not great for the dollar story. But I think based on weighting, services is probably the one that's a little bit more meaningful.
Okay. And speaking of dollar, I was talking about GU long trades earlier this week and never took them. And then price kept going up. So I feel like I missed out for sure. But also,
well, you're talking to the king of FOMO right now, Frank. I've missed this NASDAQ trade abysmally. And it's been painful, but we push on, wait for the next setup.
Look at this for the dollar index. That cross underneath this trend line. Yesterday's candle was not as bullish as we thought. It came kind of all the way back to break even, and today it looks weak. I think maybe I was thinking the dollar was going to continue higher, but maybe this could be the point where the dollar starts edging lower, and I feel like gold, or not gold, but oil and dollar have been moving kind of the same. So this is another concerning thing for the oil trade, is if the dollar keeps falling. I don't know what's in store for oil, but
that's a good point.
That is interesting to see it break this trend line.
Yeah, I think a couple things you want to see if you do want oil to push higher. You want to see things like China doing okay. You want to see things like the dollar doing strong, right? Because a strong dollar is going to be indicative of like a U.S. economy that's pretty strong, and increased demand for oil could be good in that front. You also want to see other commodities do well, and Frank, it's an interesting time because right now it's like the only thing that really flies is equities, and while that seems to be like the narrative of the day right now, there are times where commodities do remarkably well. That's not right now. And as a trend follower, that's why, we're not really trading a ton of commodities. Like there are times I feel like where I'm just trading silver, gold, oil, like constantly. And then there are times where I don't trade them nearly as much. So kind of depends on the momentum. I don't know. What do you think about gold? I've been like so frustrated with gold because it's just not going anywhere. And I think that, I think you and I would generally agree that we like to see the chart directionally moving like one way strongly, and then looking to get in on pullbacks as long as the fundamental story is playing out. Would you agree?
Yeah, I don't really know in terms of like a case for gold. I think it's I don't know. The COT is not heavy on this, and the dollar, I guess, is still stronger. It's just very very much indecisive for this market, and I think that retest on the trend line was like that was its peak, and it just seems like it doesn't want to go anywhere else. So I mean, we're just gonna have to wait. I don't think PMI data is gonna be enough to move this thing. I think we're gonna have to wait for something heavier. But I neither have a bullish or bearish stance yet. I'm not really paying attention to it either. I'm kind of looking at indices and wondering. You saw NAS is at another all-time high.
Yep.
It just broke up to like 18,090s. So that's a big move considering it broke underneath this trend line, came all the way back. So it's like, at what point does it crack? But it's a very interesting move. And what's also weird is that the small caps are not performing in the same way. So it's like, is this a true move, or is it just an earnings move from Nvidia?
Yeah, I think that's that's a good thing to point out. When you see participation being very narrow in markets, clearly it's gone on for a lot longer than many people would have expected, right? The participation being narrow. What I mean by that is that it's just, the top stocks that are doing really, really well. Nvidia and Meta and Amazon and things like that. And so when you see this monumental push, and at the same time, as you mentioned, here's the Russell. This is the smaller companies in the U.S. They're not doing that sort of move. So it is intriguing. How long can that go on? I do think that right now indices, they can keep pushing by all means. They can just go running to the hills if they want to. But personally, I'm trying to wait for a pullback. If I can get one, I may look to re-enter perhaps the SP500. But part of my thing here, Frank, I was experimenting with some data on the Edge Finder. I played around with this seasonality weekly chart, and I changed it to a cumulative chart. So check this out. I thought this was kind of fun. Right now, this blue line is the over the year average performance of the S&P 500. Now, of course, this is incredibly biased because it's looking at the last 10 years. The last 10 years have been remarkably good for the stock market, right? There are 10-year periods where the stock market would look sideways on this chart. But the point is, check this out. If you look at the current environment that we're in, seasonally, we should expect some volatility here. If we're to only go off of seasonality here, the stock market could be due for a bit of a retracement period. And perhaps that means like a 4 or 5% pullback on the S&P 500, or, a little bit more on the NASDAQ. The other period like that is towards the mid to second half of the year. But it should be interesting to see how that plays out. But I was experimenting with a cumulative seasonality chart for various markets. We could also, while we're looking at this, because it's pretty cool to look at, here's gold. Gold right now actually looks seasonally like it could have some upside to it before a slower period in the springtime. So thought that was kind of interesting just to keep an eye on the seasonality. But I like that cumulative chart. I thought that was pretty cool.
Yeah, I guess like seasonality, historically it shows that there's some gains, but we have to wait to see. This is like kind of the Fed's territory now, so they're gonna have to come up with this plan of interest rate cuts, or like what exactly are they going to do
Right.
in the latter half of the year. So until we see like more confirmation, I don't think that gold is going to have a huge move either way. So yeah, I think for now it's just watching inflation and what the Fed says, because that's ultimately what's going to move gold, in my opinion.
Yeah, I would generally agree. I mean, at the end of the day, if you're going to get, and this is something that I've reiterated several times, Frank, on the show, and I think you and I have talked about this a lot. There is an environment where gold flies and the Russell flies. But I actually we have some time. It's Friday. Why not? Let's check this out. So there's two scenarios that I think we should be aware of as a community. And also Frank and I kind of, obviously, we're trading our own money. This is something we're thinking about ourselves. Let's say that you get inflation coming down. Actually, let's do it two ways. Inflation coming down at a kind of moderate rate. And then let's talk about inflation if it starts to come down more rapidly, and what that could mean for the markets. So we have inflation coming down slowly and inflation coming down rapidly. So in scenario number one, we have the idea that, okay, inflation's coming down, cooling, but not like crashing. Because if inflation is crashing, here's what's happening. Probably, the economy is drastically slowing and we enter into a recession. So in this scenario, this is probably bullish for gold because the interest rates can start to come down as well to cool off a little bit. That could be bullish for gold. This scenario actually could be really bullish for gold, but there's even a scenario, Frank, where I think things could be added more into this picture that get even, scarier. Let's add growth to the equation. So the green line is going to be our growth. If we see inflation coming down and growth doing okay, right? This is a scenario which gold does okay. Stocks do incredible, right? Because now you have inflation, not a problem. Growth's doing okay. Number two, if this happens, this is incredibly bullish for gold because now people are scared about the economy drastically and the inflation's coming down because growth is deteriorating. But there's one scenario that beats all of these for a gold bull case. Does anybody in the audience or Frank, do you guys know what the scenario is?
Wouldn't it just be moderate slowdown in inflation and then however much slowdown in growth?
Yes, you're correct in that, but there's one scenario historically that we haven't seen in a long time. But if it happens, this is where you see gold go to 3,000. In my personal view, you see gold go to 3,000 in this case scenario. Growth obviously coming down. That's the consistent theme to a really strong push in gold. In gold is going to be growth growing down.
When inflation going up.
That's it. That is stagflation. So if we see inflation stay stubborn, that you're totally correct. So stagflation is when you have increasing inflation but deteriorating growth. In this environment, stocks go absolutely crashing. This is like, terrible scenario, and gold goes probably to 3,000. That would be now unlikely scenario because right now we kind of see more of the soft landing picture being painted where inflation's coming down, but growth is doing okay. That's why the stock market's so bullish right now. But if that story changes and we get either of these two scenarios, Frank, you and I will be talking about gold a lot more on these streams.
Yeah.
Yeah.
Gold will be a commodity to buy for sure.
Yeah, because in that point, you look at like 2008, there was some fear of that scenario. And also 2020, guys, was this scenario too. If you ever look at a gold chart and you look at the year 2020, the market was fearful of this scenario. And it doesn't necessarily mean it has to happen this way. The market's perception that it could happen this way is enough to get gold to go absolutely crazy. So in 2020, think about what happened. The world shut down. Everybody was scared that the growth would come crashing down while inflation would skyrocket because the Fed was handing out money to everybody, right? And not just the Fed, but central banks around the world were trying to help out the consumer and sending money directly to them by mail. So, yeah, that scenario caused gold to go rocketing higher in 2020. And if that scenario were to come back, and it probably will at some point in history, those are the huge moves on gold. And that's why I think, Frank, we talk about this. Gold oftentimes makes like majority of its moves in very, very quick, sudden, drives higher on a weekly chart. You can go back and look, and like most of the time that gold grows, it's like all of a sudden very aggressive. And then it goes kind of sideways and is not exciting for some periods of time. So although I know everybody loves to trade gold, I think it's fair to say that there are times to trade gold and there are times to just not touch it. Would you agree?
Yeah, I would, because when there's no real directional bias, you're just kind of guessing. And the price is also not really moving either. So I don't know. You go on the lower time frames, look for setups, and that's always a dangerous thing to do. So, yeah, I would say there are times. Well, there's times with everything. There's times to stay away from stocks. There's
Yeah.
times to stay away from the dollar and gold and oil. But this seems like in this particular circumstance, it's kind of avoid gold until you see something of value towards it, which is like if we play around with these, we can look at different cases for oil as well. Like I would guess higher inflation, higher growth is good for oil. Higher growth in general is good for the stock market. So yeah, you just have to play it by what the data gives you, and just come up with scenarios in your head, like what would happen if this happened,
Yep.
And go from there.
Yeah, that's exactly right. And understanding these scenarios, that's why we talk so heavily about fundamentals, is if you understand the environment you're in, you can trade these assets way better. And people ask all the time, they say, which asset is best to trade? Should I trade the dollar? Should I trade currency? Should I trade indices? Should I trade gold? And the answer is you should trade the environment you're in, not the asset that you're most fascinated by, because the asset changes its nature all the time. What works on gold during one environment may not work at all in the next environment. If you're somebody right now who's trading, sideways on gold, you're making a lot of money. If you're buying lows and selling highs and just trading the back and forth, selling puts, selling covered calls, whatever you want to do, that's a range bound sort of oriented strategy, you're probably doing great. But when this market starts to trend, you have to recognize that environment that you're in. The change in environment is going to be really key to watch for. But yeah, the pretty important stuff there, I'd say, Frank. That's probably, if you trade the right strategy in the right environment, you're probably going to be better off than most traders. So thanks for going through that with me. I'll let you go. I know we got some things to get done here today in the office. So thanks for joining me on the show.
Yeah, thanks.
See you, Frank. All right, guys. Yeah, I do also want to say, hopefully that was helpful to you. I know that when it comes to fundamentals and trading gold, most people look at charts only. I mean, on these streams, hopefully that illustrated just how important it is to understand fundamentals. They really, most people do not touch it. They don't want to get involved in learning all that stuff because it's hard. And just because something is hard, oftentimes what people won't do, the difficult thing is the thing that makes you profitable. Anyways, I mentioned this earlier. Let me go ahead and reiterate this. We're handing out our course today for free. We have a fundamental analysis course. We have a technical analysis course, and we're giving it all away for free to people who join the Discord. Chandler, if you don't mind, could you just tell Emily or Hallie or Drew, whoever's here, somebody to shoot a DM in here so that we can direct people to send them a DM. If you guys would like to, we're going to drop the link here in the chat. Join our Discord, shoot us a DM. We'll hand out the course for free. I'm just going to, let's see if we can get that message. I'll wait for Chandler to tell them. You should see a message pop up here in just a second from Emily or Drew, or somebody's going to be taking on the DMs. I think it's going to be Drew. Check it out. We can see Drew typing. Okay, there it is. Okay, guys, so we're handing out the course. All you got to do, join the Discords right here. Click this link. Join the Discord. It's free to join. Send Drew a message. We're giving out the course 100% for free today. So take advantage. We get a ton of free resources for you inside of the Discord. So come join us. Click Drew's name. Just shoot him a DM. Ask him for the course, and we'll get you hooked up. So there you go, guys. That's going to wrap up the stream. Happy Friday to everybody. Hope you're doing well. Hope you have a great weekend ahead. And we will be back, of course, Monday through Friday tomorrow for live streaming, taking a look at markets together. And we'll go from there. Thank you guys very much for tuning in. Have a great rest of your day.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.